American inflation is at its worst in nearly 40 years, but interest rates fell and the Dow was up over 200 points. Joining me live now to explain this is Peter Switzer, founder of the Switzer Report for the Monday Morning Business Report. Peter, good to see you. Good morning to you. So how does that work?
It is unusual, isn't it, mate? This is the biggest monthly inflation number since 1982, up 0.8%, annual reading 6.8%. You would have expected that the bond market, yields would have actually risen. That means interest rates going up. And you would have thought stock prices will fall, but the opposite happened. And the reason is, believe it or not, they expected the number to be bigger. And so remember, the big debate at the moment in the US is inflation transitory, or is it going to be built right in and really going to hurt the economic recovery? What's interesting is that when you look at the numbers, one commentator said a bright spot was the increases in the price increases for used cars, lodging and airfares were all lower than expected. So what's happened, Pete, they've drilled into the numbers. It was slightly less than expected, the big number. And then looking into it, there's some promising signs that inflation is starting to come off the boil, but albeit at very high numbers.
Okay, now 4 out of 5 first home buyers have been locked out of the Sydney and Melbourne property markets, Pete. 4 out of 5. Will prices ever fall?
Yeah, and that's a really interesting point. I think most Australians have this belief that house prices don't fall. Well, between 2017 and 2019, Pete, all the way up to that May election, where Bill Shorten was promising capital gains tax changes as well as negative gearing changes for investors, house prices really fell pretty solidly. In some places in Sydney, it fell over 20%. And that's the important point, Pete, that we look at these average numbers, but the average numbers cover an entire city. And so some suburbs don't change much, some slightly rise, but some actually fall pretty solidly. So I think the bottom line is this, and we actually have seen some of the banks make forecasts in 2023, house prices could fall by as much as 20%. So I think the bottom line is very, very hard right now. Interest rates are really low. Sometime in probably end of 2022, 2023, interest rates will start to rise. And I think those people who've overbought and are finding it really hard will start putting their properties on the market. We will see house prices falling. Don't know if we'll see 20% falls, but certainly prices will come off the boil.
Okay, something of a correction anyway. And meanwhile, Peter, a banking watchdog wants to fine bad banks, but they'll have to stick to naming and shaming.
Yeah, it's a really interesting one. This is actually a bank watchdog set up by the banks themselves. It's called the Banking Code Compliance Committee, and they really want to be able to hit banks with financial penalties, albeit only $100,000 if they make a mistake, and it goes to sort of like a community payment to some sort of a charity or whatever. But the report that's come out is basically saying, oh no, naming and shaming is probably more effective, and a lot of regulators are seeing it that way. And so if banks do behave badly, there'll be plenty of news reports for people like you, Pete, to give banks a real going over, that's for sure.
All right, Peter Switzer, appreciate that. Thank you. We'll talk to you soon.